Good afternoon, everybody. Uneducated Economist here. Thought I'd do a bit of a lumber update today. I haven't talked about lumber in a few days, and a lot of things are taking place here in the lumber industry. Uh, Number one, the wildfires. A lot of people are talking about the wildfires causing a big disturbance inside of the lumber industry as far as being able to, source out trees for sawing purposes. Not worried about it. There is a lot of land that has burned. A lot of wildfires have destroyed a lot of land. But if you were to take an aerial photograph of the available farmlands of trees, okay, and I call them farmlands because that's essentially what they are, is a giant tree farm. If you look at the available amount of trees to be cut as opposed to what was burned doesn't even hold a candle to candle doesn't even come close to what's available out there. So the amount of cutting that is capable from the burn, that's still left is vast. There's a lot of it. With that being said, there is a lot of caution because of those wildfires to go up into the woods to work. So up until just recently, because we just had some nice rainfall over the last few days, the loggers had not been up, at least not in my area, have not been in the woods working because of the hazardous fire conditions. But they're back up to work again now, and we shouldn't see so much of the issue with the wildfires, at least and not in my area. Now, up until just a couple of days ago, it was very smoky in our area. Like the like you could hardly see more than a few hundred yards. It looked like a fog bank was here, but it was all smoke. A lot of that has cleared out now. In fact, you can even see patches of blue sky through this overcast day. Much better breathing conditions now than there has been over the last few days. So that condition is getting a lot better. But talking about lumber itself, the lumber futures for the September contract closed on the 15th at an incredibly high price. Now, it went up and it touched $1,000 per 1,000 board feet, but the contract eventually closed on the 15th at a little over 900. It was like 920 or something like that, 920 per 1,000. After that 15th date, September 15th, the November contracts have become the current spot month for lumber. And the price on that has dropped substantially, especially over the last month. About a month ago, November contracts were trading at around 800 per 1,000. That is now sitting around 590, I think it is, 590 per 1,000, just under 600 per 1,000 on the November contracts. Now, this is pretty significant because if you go back a few years before it did this recent run up to 1,000, the lumber futures had peaked out at around 650 per 1,000, and right now we're sitting just under 600. So now we have come down under the previous all-time high before this run. And I only assume that as time continues that we're going to see these lumber prices dropping off. I was reading where mill orders are now shortening up. Like before they were 6 weeks out, now they're down to around 2 to 3 weeks out on a lot of plywoods and some lumber. The lumber is still stretched out there a long ways. They're farther out. They're still around, a month or so. But it's shortening up. The time period is getting closer from the time you order to the time you can receive your product. Now, when it comes to prices, I've seen a decent move change in plywoods because of this shortening up of the time, the availability coming back online. The prices are starting to come down. Now, they're still incredibly high. Half-inch CDX, which would typically sell for around $18 a sheet or so, is selling at around $32 a sheet. But it was at $36, so it's come down quite a bit. 2x4 rate standard and better, on the other hand, huge. We checked the price. As of January 1st of this year, we were selling 2x4 rate standard and better at $3.29 a piece. Right now, we are selling them at $8.63 each. $8.63 for a 2x4 8 standard and better is insane. That is a super high price. I think about, I built a little tree, or not a tree fort, but just a little fort out in the yard for the kids to go hang out in. And it wasn't very big. It was 32 square feet. I built 2 stories to it so they could have like an upper and lower level to it. Built it as cheap as I could as far as materials go. I didn't use a whole lot of materials in this to build it. I think I spent about $300 on it. Right now, it would cost more than $600 for that same material. More than $600. It was like, I think I added it up to like $680. Isn't that crazy? Prices have more than doubled. And I was using like, I wasn't using the 1/2 inch CDX. I was using like a 3/8 CDX. I was using 2x4s, but I ripped them. Like I split them in half. So I had 2x2s out of them. I would made it as least expensive as I could. And right now, to think of building that fort, which I thought was expensive then, would just be out of the question. I wouldn't do it. And that's going to be the case for a lot of people out there who are looking to, say, build a woodshed or, a tool shed or something like that, who are going to look at the prices and go like, my gosh, I priced this out. I was thinking about this a couple years ago when I priced out the materials. Now it's 3 times higher than that to get all this material to build this thing. A lot of people are going to look at the prices and start holding back on their projects. Okay, when this starts to take place, when people start realizing these prices, especially when you look in the news, like you look at the news and the articles that are being written right now, I mean, it would suggest that the prices of this lumber are so astronomically high that it doesn't make sense to even purchase right now. And it's kind of true to it. I mean, if you look at prices right now at, $8.63 for a 2x4, it's ridiculous. It's too high. But eventually, this is going to shift. This will change. But everybody's perception right now is going to be that, and they're going to hold back on projects. They're going to be like, now's not the time. Especially people who are looking at building a house right now. If they see prices at this level, they may hold off on their project until, for another 6 months just to see what happens here. But that's my opinion on it anyway. We got the Federal Reserve insisting that they are going to hold interest rates low for the foreseeable future, like for the next 3 years until 2023. And I was reading a Bloomberg article that had done a survey with the Fed, and almost everybody at the central bank is saying that by 2023 we may hit 2% interest. Okay? The Federal Reserve is saying that they want to have an average inflation of 2%. So if in 3 years we are just then coming up to that 2% inflation, it's going to have to continue on for many years of higher inflation, above 2%, low interest rates for many years beyond that, in order to get the average inflation rate up to that 2%. If we're going to hit it in 3 years, you can expect to see low interest rates for the next 10 years. And to imagine what is going to happen to all these asset prices if they are to continue with these low interest rates like they're doing. I mean, you think about it, there is hardly any inventory in the housing market right now. The demand for houses is off the charts because of these low interest rates. Lumber prices are off the charts. It costs more now to build a house than at any time in history. I mean, this is setting it up for a bubble, like a peak time. And eventually that's going to shift. And when the prices start coming down and people have invested all this money into building a house with expensive lumber, and now they're competing against people who are building houses on the market for cheaper, it's going to cause a problem with investment if you're not getting the return on what you have invested in. And I think about, like, right now, there is no pressure relief for the real estate industry. See, typically, when you loan out a bunch of loans, not all those loans are going to be successful loans. Some people are going to default. And right now, they're sitting in a situation where you have, like, forbearance. You have, like, all this unemployment checks that were issued out. You have a lot of reasonings out there that the real estate market has been supported this whole time. From that pressure relief, from allowing people to default on their mortgages. I mean, some people should not have this mortgage. They need to default on it. They lost their job, they lost their income, there's, something happened to them in which that this loan needs to be defaulted on. But they're not doing it. They're forbearance. They're, given this extra money to make the payments with, which is coming to an end. The forbearance part of it, it can continue for a little while. They can always extend it. They can always stimulate the economy with more checks. They can always do these things. Okay? But the problem with it is that they're not giving it a chance to have that pressure relief to allow some of these mortgages to go into default. And when you don't have that, then there is no extra inventory coming onto the market. And when you have no chance of extra inventory coming onto the market, then you're going to have a supply tightening like it is. Eventually, that support of those forbearances and those extra stimulus and all that other stuff, it has to come to an end. You cannot just continue to just hand money out to these people and expecting that to be a successful way of operating a market. It's totally obscuring the market. Right now, there should be all kinds of people defaulting on their loans, but they're not. They're being supported by these forbearances and government stimulus and stuff. So at some point in the future, all this is going to change. Prices of lumber are going to come down. All those houses that are being built right now are going to start taking a loss on the fact that the new houses being built are going to be able to be built cheaper and be sold cheaper. People are going to start foreclosing on their homes once the forbearance starts to end. And that all this backlog of people who should have gone into default at some point will be rushing into the system. Okay, this is kind of the thing that I foresee. I mean, the Fed could step in and start doing something. Here's money and everybody gets, whatever. They could do all that, which, they probably will. But ultimately, that's what they're covering up, is that, is all those foreclosures and forbearances that should be in the system right now. There's no pressure relief. That backlog is going to come in, and one day it's just going to explode. Boom, here they all are. Now you got to deal with them all. All right. Uneducated Economist, you guys let me know.